Welcome to the Family Banking Show with your hosts Rob, Derek, and John, where we dive into the world of the infinite banking concept and discuss personal banking strategies to secure your legacy and build generational wealth. We're glad you're here, and we hope this episode serves you well.
If you're interested in learning more about setting up your own family banking system, send an email to thefamilybankingshow@gmail.com. We'd love to hear from you.
Welcome back, ladies and gentlemen, to the Family Banking Show. We are your hosts, Derek, Rob, and John. Guys, after a mini vacation, how's everybody doing?
Good. I think John's finally feeling better.
Yeah, I'm not hobbling anymore after a marathon up north here in Duluth. Feels good to have it done with and to be able to walk normally and not have kind of it's almost like a marathon if you're training for it, it's like something really good to be like training after, but it's always like on the horizon and you're always kind of anticipating that it's coming around the corner. And now that it's done, it's like a weight lifted off and just um, enjoy weeks without like stressing over working out and getting the runs in and following the plan.
Yeah.
So
Well,
bittersweet.
yeah.
Thank you. It's done though.
Well, congrats on being a fast finisher.
Yeah,
Thanks.
a lot faster than me.
Yeah. Grandma's marathon walk. That would be mine.
Yeah.
I was telling the guys before the recording just how incredible it is to me how there's like high school girls, like even like 60-year-old women, like all kind of walks of life, age groups, men, women, like who are incredibly fast. Like I thought I'm kind of in like the prime age and stage to be kind of quick in a marathon. But I'm just getting blown past by like 60-year-old women or 15-year-old high school girls and even there was a 70-year-old man who was much faster.
Wow.
It was just incredible to see people's like mental strength and probably the time that they're putting into it. So people are impressive.
Yeah.
Yeah. God has many ways to humble us, doesn't he?
Right. Yeah.
I don't know if I'd be so surprised about the high schoolers, more so the
Yeah.
70-year-old,
Mm-hmm.
that are, but then I shouldn't be as surprised. There's probably plenty of 60, 70-year-olds who are in better shape than I am. So,
Hmm.
Yeah,
yeah,
the number one woman was, I think, 67 years old, finisher
Wow.
nice.
Wow.
in the non-elite,
That's
group.
yeah. That's great.
Yeah.
Impressive.
Craziness.
Well, good.
Well,
Now
what
your body
hurts?
can take a break.
Yeah. What hurt the most? Was it the quads, hamstrings, shins, or is it
I
kind of jello afterwards?
Yeah, I'm pretty used to like kind of tensing up in my legs because that's just a natural part of running long distance. But something I have never experienced, and I've done some like long races, like Ironman triathlon stuff in the past. I've never had my lower back and my whole core like
Mm.
seize. So I was
Huh.
like, running like, oh boy, like how do I breathe right now? Like,
Oh,
uh,
wow.
and that was like at the very end, and it's kind of funny. They just came out with the like pictures of the race and they like sift out the ones that they
Oh
took of
boy.
you. And each one
You're
I'm
in
just like
pain.
grimacing, like looking down, like just not a happy camper. Like,
Yeah.
it's all towards the end. They didn't get like the fast miles in the beginning. So
Mm-hmm.
kind of funny to just laugh at yourself there. But yeah,
When
definitely that's a new experience is the back and core.
you'll have to educate me a little bit, but I've heard of runner's high. Is there a certain mile marker where you kind of get that runner's high, or is it just the entire race?
It depends. But for me, I actually felt it like kind of between 10 and 19. It was just like
Mm,
cruising, just like autopilot.
mm,
But then I realized, oh no, like I was going way too fast for those last like 9 or 10 miles
mm,
and it paid on the back end and
mm,
you know, you live and you learn. But
Yeah.
mm.
Well,
Well,
congrats again. Yeah,
yeah,
that's a big
congrats.
accomplishment, something that I have no desire to do.
and yeah, unless you want to, I would not wish it on anyone. Like
The furthest I ever sought out to run was a 5K. And I think I was close to the time I was shooting for, but I don't even remember what that is now. But when I hear you talking about running, what, 5 to 6 miles per hour, I'm just like, oh boy.
Yeah.
My time probably wouldn't have been able to keep up with that for sure.
Mm-mm. No way.
So, all right, well, we're going to be talking about energy and motion and all these sorts of things in today's episode. Guys, we're taking it back to Nelson's book, Becoming Your Own Banker. And if you're following along with us, we're going to be talking about page 15, where Nelson describes the boiling point of water, which is, of course, 212 degrees Fahrenheit. And the way that Nelson talks about this is, this is a point in your infinite banking journey where you are now having a ton of energy built up into your system. And so for today's conversation, we're going to talk about, our different ideas as to when does this occur? What stage of the policy might this be for you? And I think you'll enjoy it as our listeners, us kind of banter back and forth a little bit and throw out different ideas. So, Rob, I think we'll take it with this first example being the earliest in the life of somebody's infinite banking policy. Why
Hmm.
don't you go ahead and take it away? What was your first idea behind when do we reach this boiling point?
Yeah, well, as Derek mentioned, we kind of talked about this before we started recording, and it was fun because we each have kind of like a base comp idea of when that boiling point is. But then the more we started talking about it, we started finding these other kind of maybe boiling stages. And but the first one, I usually whenever I am building a policy for a client and we're doing early cash value whole life insurance policies where you front load it, and so it has that cash value at the front end. That's how we design it for our clients because that's how Nelson talks about it in terms of infinite banking policies that you can leverage for life. Um, so whenever I'm building an illustration for somebody, a policy for somebody, I want to see where is that point where the um, the cash value growth of the policy exceeds the premium you pay in. So you put in $10,000 and it's projected that you'll have $10,001 of growth. That's that kind of that first stage where I look like it's heating up and starting to it's becoming more efficient. And then and that's usually the way we design it, 4 years typically around that frame, 3 to 4. And then I always look at when does it break even? When the total amount of premium I paid in matches the cash value that I can borrow against. And that's usually around, and that's kind of what I traditionally call when I say that's when it's really cooking. It's starting to boil at that point, in my opinion, when you put in $100,000 in premium and now you have $100,000 in cash value that you can leverage. And then you've basically got all your money back, so to speak. And from that point, like it really starts to take off. That's how I traditionally looked at it. But then when we were kind of talking through it, Derek and John had some ideas. Well, I really kind of, if I think this is kind of where it really takes off. So that's my starting point. When you get more cash value growth with every dollar you put in, and especially at back end of the policies, that's when you really. I was just looking at a child policy when the base premium at that point, it was like 40 years out. It was like $786 for the base premium. And by that time, I designed it so that there was no term and then there was no PUA because we have to follow MEC rules and we want to make it as most efficient. But like $780 of premium, and it was like $160,000 dividend projected growth. That's
Crazy.
insane. And so anyway, it really cooks, in the lower in the out there 30, 40 years. But when I look at them, that's that initial point. The dividend, premium dollar, you get more cash value, and then when the break even point, that's how I initially look at when does it start to boil.
Right. Yeah, John, what was your take on when do we reach the boiling point in the life of the policy?
Yeah, my initial thought behind this was when does my system of policies, my family bank, get to a level where I can just start to really effectively and quickly and repeatedly create opportunity and create value for my family. And generally
Mm.
that's, taking advantage of opportunities. Um, Maybe it's real estate, maybe there's other, private equity investments or whatever it may be, where you can leverage those policies at a specific scale that creates freedom for my family. That's what I kind of initially thought of it as, where it's
Hmm.
like maybe in year two you don't have enough cash value to completely finance a rental property or completely finance uh, we were talking before this recording about a BRRRR method of where you buy it, you rehab it, and then you refinance and you have this perpetual cash flow. Like, can you completely absorb that in year two? Probably not, unless you have like a big, lump sum on the front end, or it's just a significant policy.
Mhm.
Uh, but for kind of the majority, that's not the case. So then I'm thinking, when does it like heat up to a point that the effects are multiplying rapidly and it starts to really snowball and uh, we talk about kind of being the honest banker and paying yourself
Hmm.
back, and the opportunities and the value you're creating repays at a much quicker rate, and then
Mhm.
you're able to redeploy it, into the next thing and continue to create value. So that was my initial understanding, which does create steam, in the
Right.
metaphorically speak, like the freedom, like we love infinite banking. We love this. We nerd out over the specifics of life insurance and so forth. But what personally I love even more is the freedom that it creates and the family
Hmm.
mission that you can actually like fully be on,
Mhm.
knowing that you have made decisions financially that free you and enable you and equip you to be in that stage. So just imagine, you have passive income exceeding your lifestyle and even passive income paying for your premiums, like
Hmm.
what are the things that you're able to do as a family at that point, called by God most likely to like really serve and really be more generous perhaps, or do the things that we only get one shot in life at. Um, so like what if your system was able to, enable you to do that? So that's the ultimate kind of vision that I had up
Mhm.
front. But then it was crazy. We were even talking even further long term, like what that would look like. So it's all maybe dependent on where your mindset is. We should probably listen to Nelson over and over again and think long term and minimum 70 years.
Hmm.
But certainly, like Rob, when you're thinking about capitalizing and even some of the short term milestones per se to get through, when that dollar becomes one or more dollars every premium after like years 3 to 5 range, that's a
Hmm.
very, especially like kind of psychologically, very
Yeah.
powerful milestone where it's just
Yep.
purely liquid. Everything that you put in, you're done kind of capitalizing. And then that break even point, another powerful moment where it's like, I'm no longer, I'm no longer essentially like, there's no cost like
Right.
whatsoever. I am past any sort of understanding of this being a cost to me and purely like an asset. So I think mindset wise, psychologically, like those are like incredible milestones short term. Um, but I'd be curious to maybe continue debating on like when it really becomes steam and talking about how Nelson talked about it. Um, the steam engine changed the world. Like
Hmm.
what are things in infinite banking that is going to change the world? It's going to like change the course of our families and our community,
Hmm.
and so
Yeah.
forth. So that's kind of the fun part to dream about.
Yeah.
Yep.
Well, I'll throw out two, if maybe not three more examples as to when this could be, right? When we were bantering before we hit record, John, I think you brought up like if you had an opportunity, an investment opportunity come to you and it required $250,000, but your policy only had 200K in cash value, I don't know if you'd say really you hit the steam point yet because you're
Yep.
not able to take advantage of that opportunity. So that's an example number one. I liked your example though, John, of it's this point whenever you're able to recycle this
Hmm.
your cash value quickly, take on more opportunities, get to that level of freedom that you're talking about. Um, Maybe another option would be whenever you've replaced the banks. when you have reached that point where you no longer need third-party banks for the banking function in your life. You're able to finance all the things that you need, cars, college, maybe even your mortgage if you wanted to. Even today, in today's world, actually, borrowing from a life insurance company at 5.3% versus a mortgage at 7 can start to make a lot of sense.
Yep.
So, it could be whenever you've replaced the banks. Another example, the third one here, and then we'll get into the very long range idea is whenever the dividends exceed your premium payment. And
Yeah.
usually that might not be till what, year 20 for
Hmm.
kind of an
Yeah.
average policy, maybe. And the reason why I say that is basically you're getting not just access to the cash value, but if you had to, you could do a reduced paid up at that point. The policy can sustain itself and still increase in cash value over time without
Right.
taking a huge hit to the policy design. So yeah, those are a couple of different examples of maybe when you hit that boiling point. What are your guys' take on those three?
To kind of add on to what you guys are saying, just that concept too of utilizing the cash value and this goes back to how much premium you put in, because if you don't put any premium in, there's really going to be no cash value that you can leverage. So that's an encouragement. It's when you first start thinking about it and it's kind of scary, like, oh, I'm putting all this dollars into my policy. The first kind of mental switch you need to make is, well, the dollars are available. It's like I can just take them out again and leverage them for something. But if you don't put anything in, you can't take advantage of opportunities because you don't have enough cash value. So that's just a point to keep in mind when you're thinking about this and what you can leverage it for. You put a little in, you can only use you're protecting your family to an extent, but you can really only use it for life very minimally.
Right.
And so just keep that in mind. So that's an important part is what you get out what you put
Mhm.
in this case for sure.
Yeah. Which is why Nelson says don't be afraid to capitalize, right?
Yep.
It's you're only going to reach your goals. You'll reach your goals sooner the more you're able to capitalize. It's as simple as that.
Yeah. And generally, we recommend somewhere between 15 to 25% of your gross household income to be allocated towards uh, infinite banking. And that's
Hmm.
what we found. And I personally found like we do it ourselves, to capitalize in a meaningful way in relation to a lifestyle, and uh, yeah, just what your world looks like. It's all probably percentages, but so that's a great starting point. And then going over back to your point about what Nelson Nash talks about, which I would argue this is probably what he would say. We don't have his quote, on record. That is the steam engine point is probably when you can completely replace the banking function. The title of his book is Become Your Own
Right.
Banker. He tells us not to do business with banks. He's passionate about segregating or separating ourselves from the banking world.
Right.
And he was able to do it 13 years after 13
Yeah.
years
13, 14, I think.
of his policies. So um, I'm sure that's, well, I'm not sure. I would, you know, bet that that's his take on it. And there is lots of freedom that comes from that. And it takes a little patience probably to get there. But the freedom and the control that you have at that point is just incredible to think about.
Right.
Yeah, and how can I help you too? When you mentioned Derek about if what a potential boiling point is if you have enough cash value to take advantage of an opportunity. And if you don't, you have to keep capitalizing the system, and then you will be able to. But that reminded me of I had policy dollars working somewhere else, but I had a family member kind of got into a bind, and I was like, oh, I wish I could help you out. I wish I could have helped him out, but I just didn't have the cash value to help. But that's just another. It just gives the dollars are being deployed effectively somewhere else, but it just got me thinking, if I just had more and if it would have been a little farther in my capitalization period, I would have probably had some more buffer that I could have taken, helped, not even taken advantage of an opportunity, but I would have been getting my dollars back at interest, of course, but I would be able to also help somebody who needed it. So
Mhm.
another steam point. Where I liked you had this visual, John, of like you had the boiling pot of steam with all these steam engines taking off and going and doing work. So you build that capital base up, and that's boiling. You can send off all these little boiling steam engines to go do work for you and bring returns back or help people, or you got to capitalize the system in order to take advantage of that.
Yeah. Yeah, on page 72, and I think this will probably be our last example of when the boiling stage might be, or the final boiling stage. Page 72, Nelson is in this section where he's talked about the even distribution of age classes, a fancy way of saying the family banking system, the
Hmm.
intergenerational family banking system, which we've just done a few episodes on that. Um, so if that's not maybe making sense, refer back to the last two episodes at the very least.
Hmm.
But it's this idea of each generation having their own policies and they're continuing to grow and recirculate that death benefit to start up the next generation. And he says this is the point where you have created perpetual motion in your family's finances. And John, I think this is what you were alluding to is like the final mission
Hmm.
or the final stage of your family mission is, at least financially, is getting to this point where you've recycled and your entire family line has now got their own banking system to take advantage of.
Yeah, and then even just a little bit further down that page, I think is just so key. Money won't buy happiness, but poor stewardship of money will steal happiness.
Hmm.
Um, and just think of, um, yeah, we keep talking about freedom and control, and uh, I keep thinking about what would the Rockefellers do, that book,
Hmm.
and how this even distribution of age classes speaks to the Rockefeller family has done so much good in their philanthropic kind of efforts through their perpetual motion of a family bank, and this has been the cornerstone of it. And just thinking about the mission that you can do, the values that you can create through a family bank, like generationally.
Hmm.
And like Rob was saying, I think of it like, my kids or different cousins or, arms of my family. Just, hey, here's an opportunity that I can go to the family bank for. Okay, yeah, I'll send you out, create this opportunity, and just send a bunch of opportunities out and value creators out in the world from a position of strength to continue to create more value and create, lasting change, around you. So yeah,
Yep.
absolutely.
All right, guys, any final thoughts on the stages of the boiling point in the life of your policy?
Well, I think, yeah, summary is there's multiple boiling points. That's what we kind of came down to. It is 'cause it was fun to talk through, and I just love the vision. It can, if you can see these different stages, it's like a rocket taking off, and it has these different stages, and how that could affect your family, how that could affect your community, how it can bless generations. And it's the thing, and you could say, well, you could argue, well, you could do that in the stock market. You could if the stock market didn't crash right when you needed it the most, right? That's what I love about using a permanent whole life policy is it's guaranteed, there's guarantees. It's a contract. So if you just pay premium, you will achieve the goal. There's no question of the market collapsing on you. It's just consistency and being a good steward. And that's something we can all do. And there's no magic to it. That's what I love about it. It's achievable. So this vision of these boiling points and these stages of life can be achieved. And I think that's what's so powerful about this process, this infinite banking process, and utilizing this totally misunderstood and not understood, product early cash value, permanent whole life, and dividend paying whole life insurance. So yeah, that's what I just love about it. It's achievable for you listeners and watchers.
Mhm. Well said, guys. Well, thanks again for joining me on this episode, and thank you to our listeners. If there's anything that you'd like more info on about how to get started with your family banking system, you can send us an email at thefamilybankingshow@gmail.com, and we would be happy to schedule a time to meet with you. All right, guys, we will see you in our next episode.
See you guys.
Thank you for joining us. If you're interested in a conversation about anything we've discussed, you can find our contact information in the show notes below.
And subscribe, follow, and leave a review to help spread this message and to help families across the country discover the generational blessing of IBC. May God bless you, and we'll see you next time.